direction. Every scar, every hit only made me better.
Okay, hey, good morning, everyone. This is Demetrius with Akeelah Traders, and today is June 29th. It is Monday, June 29th. It is around 11 a.m. Eastern Time, and in today's video, I'm going to do something pretty unique here. I'm going to call this video "How to Buy NVIDIA for $60 a share." So that's going to sound pretty strange. And actually, the way I should frame that is how to get into NVIDIA for $60 a share. And so what we're going to look at today is we're going to take a brief look at the NVIDIA chart. This is one that we've been following for quite a while now, ever since it had its all-time highs up here at around 235, 236. And we saw a break of structure up here that we follow on the 4-hour time frame that showed us that this market was going to pull back up to this 230 area and then drop down at least to this area that we're in right now. And so you can look back at some of our previous videos to see how we got that. But the focus of today, I'm going to talk about CFD trading. And so that's the primary market that we trade in. It's CFDs, it's contracts for a difference. And so it's very similar to options. If you're not familiar with that, it's very common in the Forex market. Most people trade Forex on CFDs, but I'm going to talk about how to enter a position like this. So what we've been following NVIDIA for quite this time, what we're looking for is to try to get an idea of where the bottom of this thing is. We know it's been falling. We know it can potentially fall further, but if you're looking for holding a long-term position in this, we're trying to see what is a safe area to enter this so that I can use leverage. We like to trade on leverage, and I can maximize my position without being liquidated. And so what we're trying to find is there's always a gap that you have to see. And so in this example I'm going to use today, so right now NVIDIA is sitting right at 194, let's just say $195. So our bottom target on this, in one of the previous videos, I focused on the fact that this was a daily demand zone that we needed to hold here. As of right now, I'm looking at the weekly chart. But as of right now, the market did not hold that daily demand zone. So there's still a likelihood that this could fall further. And this next area down here I have is around 180 to 182. And then the area that's below this, what I would call the source of this whole 4-hour structure that started the fall. The source of this is down here in the 160, let's just say $170 range, okay? So that's got to be an area of concern. As of right now, if I'm looking to hold this long term, I can't even consider that being the bottom, because this is very likely that the market could fall down to this area. So we're at 195 right now. It could fall down to 170. So anywhere between now and 170, you have to consider that as a possible entry area, not as a area for where your stop loss or something should be. So what I want to consider is this area way down here. So if we lose this here, this 170 area, then the floor on this, in my opinion, is down here at what I would call a previous daily demand source, or it's a daily demand zone, but it's internal here. And there's some other gaps that's down in this area here. But I would say for a long term, considering all of the new changes in AI since NVIDIA was back in this area, this was back around May of last year. So in the past year, there's been a ton of investments, a ton of AI, strategies and revolutions, all this kind of revelations, excuse me, all these kinds of things with NVIDIA. So I'm going to consider this just for these purposes, that my safe zone area is going to be down here around this 130. Okay. And so what I have to consider if I'm doing CFDs is the way contracts for a difference work is your position is managed based on the time you enter and the time you either exit or where your stop loss is. So the difference between where it is now, 195, and where the floor is 130, well, that's $65. I'm going to pull this out of here. I was previously looking at something else, but I'm going to say this is our $65. So I have to look at it like this to say my real risk range meaning if I open a long position into this, how far could it go against me realistically? Now we know the overall market could crash. There could be a major catastrophic event or something that happens that just floods the overall market. And if that's the case, all stocks and everything are going to fall anyway. So I'm going to use this, my arrow here, to go from 195 down to this area here, 130. Looks like the bottom of that's like 132. I'm just going to say the 130 so we can kind of talk round numbers. Okay, so this is where I'm getting my $65 risk from 195 to 130 is $65. So my relatively safe max risk here on NVIDIA right now is $65 per share. So if I open a position and contract for a difference, the way that's going to work is if I open one share. So one share of NVIDIA right now is $195. But in CFD trading, we have the ability to take advantage of leverage. So I don't have to have $195 to do that. I have some portion of that. So for these purposes, we're going to assume that we have 10x leverage. Okay. So if I want to open a position, my max risk range is $65. Then if I want one share of NVIDIA, then that's $65. I can open that. I can open an account. I can have $65 in my account, and I can open up one share of NVIDIA. There's some other nuances to this where you have to, control the margin and that kind of thing. So there's a little bit of, extra things to consider in that. I'm not going to get into all of that in this brief video, but for $65, if I open up one share of NVIDIA right now at 195, I will still be in a long position as long as NVIDIA stays above $130. Okay. So I'm not going to get liquidated into that position. So I'm going to use a little bit of buffer here. So let's say if that's $65, I need $100. So if I had $100 in an account, I could open that account, open up one position of one share long position of NVIDIA, and I would be safe all the way down to $130. Now, if you want 10 shares, excuse me, if you want 10 shares of NVIDIA, then that needs to be, instead of 100, that needs to be $1,000. If you want 1,000 shares of NVIDIA, then that needs to be $10,000, and so forth. So if you, 100 shares, it needs to be $10,000. 1,000 shares, it needs to be $100,000. So let's do the math here real quickly. Or at least I'm going to write out what this is so you understand what I'm saying. So here, if we have one share, it is a $65 risk, right? So if I have 10 shares, that's going to be a $650 risk. Excuse me. 100 shares is going to be $6,500 risk. And again, the buffer that I was saying adding to this is going to be because you have to consider the margin and margin percentages and all that kind of stuff. So again, I'm not going to get into all the particulars of that. But this is pretty much what it looks like. So if that one share, a $65 risk, so I need to open that account, the safe zone, I'm saying, I need to have $100 in my account. And all of these just scaled up by 10. So for a $650 risk, I need $1,000. So for $1,000, if I open up a CFD account with $1,000, I can trade, or I can control the position of 10 shares of NVIDIA. 10 shares of NVIDIA, if I bought it right now at 195, that's going to be almost $2,000. So we're pretty much talking about a 50% off here. And so I'll just continue this with 100 shares. It would need to be $10,000. And with 1,000 shares, it need to be 100 grand. Okay. All right. And so that's pretty much how CFD trading or how a position like this would work. Now, what is this going to look like on the, we're already looking at on the downside. So if NVIDIA does drop, something major happens and the market tanks and it drops all the way down to $130, then what's going to happen? If I was in this one share position, I just lost my $65. That's it. That's what that means. You know, again, plus or minus margin and carryovers and that kind of stuff. So maybe we'll use the whole $100 here, but the risk would not be the total of $100. So you're going to lose $65 to $75 somewhere in that range. Okay, if I had this 100 shares, if I'm wrong in this position that I carry, then I'm going to lose my $6,500. That money is going to be gone, because the market went against me, and it went against me all the way down to this $130. I held it. Now, so that whole $6,500 that you had at risk is gone. Now, with CFD trading, you have the opportunity to get out of the market at any point in time. So you don't have to carry it all the way down to here. And this is where it's good to learn how to trade, learn how to read the markets, so that when we get to areas like this, around this 170, there's things that we have to read to understand, you know, is the market likely to bounce back up and continue going up from here? Or if it loses this area, is most likely going to fall down here, I can get out of that position. So I don't have to hold it until the whole $6,500 in this example is at risk. I can get out and maybe I've lost $2,000, you know, but I'm still holding on to the majority of my funds. And then when it gets down here, I can get back in again. So that's how the trading game works. And so, you know, this is a good way to look at what your potential downside is. Now let's look at the upside of this. Why would we want to consider doing such a thing? And I'm going to use the 100 share example here. So I already talked about how the risk is $6,500 if it tanks, if it goes against me. That's max risk there. Now let's look at the upside. If the upside, let's say I'm in here at $195, then the upside is I perpetually control a position of NVIDIA of 100 shares, dollar for dollar, for any kind of increase. So let's say if NVIDIA gets back to its all-time highs, when it gets back to the all-time highs of, let's just round numbers, say 240. When it gets back to 240, well, at that point, I am up. I got in at 195. I'm up $45. $45, you know, per share. And I control 100 shares. So I'm up $4,500. $4,500 that I would be in profit. And I'm still holding this position. I can scale out. I can close that position. I can add to it. But for these purposes, let's say what the upside is. So if we get back up to here, I'm going to put a number here. So if we get back up to here, your potential, and we're only talking about the potential here, that's a potential of a $4,500 profit. All right. And so this was assuming that you were controlling the 100 shares. All right. All right. So assuming you were controlling 100 shares, then your profit at that point would be $4,500. All right. And so we look at everything in terms of risk to reward. Risk to reward. We don't want to risk all of that, but at $6,500 total risk, at this point, I'm already at a potential $4,500. Well, now, and this is, again, to be considered for a long term. We're talking about doing this for someone who's not trying to day trade, not trying to, well, maybe long-term swing trade. You're trying to hold this through 2026 into 2027. You're trying to ride the AI wave, so to speak. So if we get here, that's a $4,500 potential profit. If and when NVIDIA gets up to, let's say, $300, at that point, I'm up $105. I got in at 195. If it's up at 300, that is $105. So at this point, my potential would be, if I control the same 100 shares, my potential is $105,000 profit. That's again the same thing, assuming I was holding 100 shares. Now, Is NVIDIA going to get here soon? Maybe. How soon? I can't tell you that, right? We're going to read the market and see. But the goal of this is I could, in this example that we talked about, I could have $10,000 in an account that I could open in CFD trading. And with that $10,000, I could open up 100 shares position in NVIDIA. And my potential upside is going to be, if NVIDIA gets to, back to its all-time highs, my potential profit is $4,500. And if it continues to $300, my potential profit is $105,000. That is huge. That is a tremendous upside there. So, of course, that's not guaranteed. There's nothing guaranteed in these markets, but this is a good example of how a potential play like that could work out and why it's so critical to learn how to trade, how to understand when to get in the market, when to get out, when to take these kind of positions. So, again, this NVIDIA, this is one we've been following for quite a while. And I'm going to leave you with this point, how much critical it is to understand that we did not get into a long position up here in NVIDIA. We have some people in our trading channels, some friends, we have some clients that were considering getting into NVIDIA when it was up here at the 215, 220 mark. And I was screaming, no, 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 do not do that. Do not do that. Don't get into that because there's a high probability, high likelihood that NVIDIA is coming to $200 or below. And so that is a potential 35, let's see, it was up again, 235. This is already a $35 savings, so to speak, which going back to if you were controlling 100 shares of that, that's $3,500 potential profits. So we want to try to maximize our profits in that. So hopefully this was educational. It was informative. And if you want any more information about how we trade CFD trading or how to get into reading the markets like that, we're having a live trading class coming up on July 7th. It's a totally free class that we're giving a 90-minute class to kind of teach everyone how we trade these markets, how we understand how to read the markets and get high potential, high probability trade setups like this. So if you have any questions along that, join us in that class. If you have any comments, drop me some comments. If you're not familiar with CFD trading and how that is, maybe drop us a comment or something and we'll send you some information, or scour YouTube. There's tons of videos out there about that. But hopefully this was informative, and we appreciate you guys joining us for today's trading class, and I'll see you next time. Thanks. Please hit that like button, subscribe to our channel, and again, comment, and we'd love to hear from you. Thanks, and have a blessed day.
I've been trained in the fire, I was built for the pressure. Every scar, every hit only